Welcome to the weekly market roundup from the Nebraska Soybean Board, Nebraska soybean farmers, and their checkoff. I'm Steve White on the Rural Radio Network. Time to meet this week's analysts as we take a look at what's been moving markets in the last week. We've got Heather Ramsey from the ARC Group and Ross Baldwin from eggmarket.net. It has been a week where we've had some trade news, some tariff talk, some legal action. The market's continuing to move. The grain markets ending the week probably not quite where we would like. Cattle markets, how much higher can they go? We're going to break it all down in just a couple of moments. But first, here's a message from the Nebraska Soybean Board.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
Welcome back to the weekly market roundup brought to you by Nebraska soybean farmers and their checkoff. We've got Heather Ramsey and Ross Baldwin joining us. Heather, let's start with you. What's kind of your takeaway? What's going to go down as kind of the notable action that we've seen in the last 7 days, would you say?
You know, this is one thing I dislike about markets is when we get these holiday shortened weeks and it kind of throws the whole rhythm of what was going on off. Funds and traders like to pre-plan for a holiday, and then they also take then another day or two to kind of get back in their mode of operation. And so it's a 4-day week that honestly feels like we really only traded anything for maybe 2 or 3 days. The biggest takeaway, I think, is this potential reversal and then an upholding of these tariffs that have been put on by the Trump administration. I think it has left everybody more confused than anything. It's been really interesting to kind of look back over the last few months and realize when tariffs were first talked about and announced, that sent the market lower. Then when it was talked about tariffs being, not approved in the format that they were issued, the market still went down. And now when we talk about no tariffs are being upheld so far, they're going down again. So I'm not seeing the kind of like a reaction, I guess, maybe that I thought I would see over the tariffs being potentially, like illegally used or whatever the right term is. I kind of thought, well, if tariffs come off, shouldn't we see an equal and opposite reaction? Now, granted, that's not truly what panned out, but that was kind of the market headline and sentiment was that we're not going to allow these tariffs. They've got to come back off. The market did not react accordingly versus what their initial reaction was when they were put on. So that's interesting. I think that's a whole lot of unknowns at this point. And from a farm standpoint, I've had some customer conversations where really it's just, we have to keep worrying about the things we can actually worry about. And unfortunately, none of my farmers are going to show up in court to testify for or against a tariff, right? So that's not something that we need to sit here and try to, really stress over. We just got to kind of take what we've been given in this situation and figure out how to protect ourselves and move forward. So as much as it's in a headline every single day, from a farm standpoint, not a whole lot that we're going to be able to alter in this situation.
Yeah. And Ross, what about you? What would you say is kind of your headline for the last week here?
Steve, my headline would be a large focus that I have is in the cattle markets. I work with grain producers as well, but obviously the cattle markets have been one of the hottest and most talked about markets of the year. And the headlines for the cattle market, obviously, is we started the week with the fake news headline of the New World screwworm being found in Missouri. That was on Tuesday morning when trade started, and the markets actually opened up a little bit higher on the heels of what I would call confirmation of the bullish cattle story with the cattle on feed report we had Friday, and cash trade being at last week was a record high at the time before this week's trade. But on the heels of those bullish news stories, the market was higher for a little bit. And then once news started getting out about this headline that came out, which was deemed fake shortly after people started hearing about it, the markets, you had fat cattle down over $4 in short order, and feeders were over $7 lower at one point. Then the markets closed well off of those lows. Actually, right now we're a little bit higher on June live cattle for the week, and feeders are still down actually 90 cents to $1 for the week, but fats are $3 off those early Tuesday morning lows, and feeders are over $6 off of those lows right now. But the headline I would say is we've got cash trade making new all-time highs here again late yesterday afternoon, and even this morning we're still trading it, but the futures market's not responding. And I think there's just a little bit of angst and concern in the cattle markets given the levels we're at. You have that headline, and it was fake, but you have a headline like that and a managed money crowd that's record long feeder cattle. And so I think a lot of people are just a little uneasy going home for the week, to say the least, in cattle.
Yeah, Ross, I was just going to ask a follow-up on that, but when we look at the cash price versus the futures price, the cattle market seems like it doesn't know how to make up its mind on which way the sentiment is moving there, does it?
Correct. We've got, up here, I'm in the north, you call it the north, the western Iowa is where I'm at. And I mean, the basis that we're seeing, it's just unbelievable. I mean, it's essentially a plus $20 basis, $18 to $20 over where the futures are. I mean, we've seen cash trading 235 live. Dress trade's been anywhere from 370 up to 375. So fundamentally, the market is extremely strong. It's obviously the most bullish market we've ever seen, and it doesn't seem like the fundamentals are going to be changing anytime soon, barring we don't get some outside black swan news story that we have seen can happen, all but it was a fake one. But we got a glimpse of what could happen if we do get a headline where there is actual confirmation of the screwworm being in the States. And I think with the managed money crowd being as long as they are in live cattle and record long in feeders, you're just getting we're really stretching the rubber band here, where cash is bullish, but futures are saying, hey, we need to maybe slow down just a little bit. And it's, I tell everyone, there's a little bit of something for everyone in this market.
And Heather, our row crop friends are probably thinking, gosh, this reminds me of a couple of years ago when we wondered how high can corn go. And well, now we've seen the other side of that, haven't we?
Well, I was just actually sitting here thinking, I feel like this is a very similar situation in soybeans right now. Yeah. The futures side of soybeans is an absolutely global market, but domestically, the reports we got earlier this month, we have some seriously short stocks coming our way on not just this 24-25 soybean crop we're finishing up, but also the projections for 25-26. I would lean towards this maybe the biggest carryout on 25-26 that we'll see from a USDA number standpoint, because if we don't expand the soybean acres, and I don't think that we are from this spring planting season, that carryout number probably only goes lower. And we're kind of in a very similar, it's not quite as drastic as what's going on in cattle, but we're starting to see, bean basis that screams and says, hey, we need beans, and they're not here. And we're not choosing to plant them in a robust amount by any means this season. So that's going to be an interesting dynamic. The further we go and the closer we get to harvest, especially in the state of Nebraska, but really any state across the Midwest, the bean numbers are down. The demand domestically for beans is not necessarily following the reduction in production. And so we could see some real interesting basis values from that row crop side as well.
It's been interesting as I talk with producers across Nebraska. The story they would tell me over the last 7 days has been the weather. We've actually seen rain for the second week in a row, which when was the last time we had 2 weeks in a row of rain across the Great Plains? It seems like that's been an eternity. Ross, let's talk to you. Any thoughts about what weather and getting some rain on the northern plains might mean for things?
Where I'm at in western Iowa, we've had good moisture also. And if anything, and the temps are warming up today here, that's what we need more than anything now is sunshine and heat. And it's probably pretty similar to where you guys are at. Your moisture profiles, really changed and for the better. And now we're all sitting here needing heat. And I think it goes back to, heading into the growing season, we obviously need the moisture. You've got the western corn belt, and that's on the drier side of things. The east isn't anything like the west has been, but we're sitting in really good shape heading into the growing season. And just to echo some of Heather's comments there, just around soybeans, is there's very little room for error on the soybean balance sheet as we head into this growing season. So I think that's one of the biggest stories that I see for corn and soybeans heading into this summer. It is obviously weather is every year a focus point, but just given the lack of bean acres and where these beans are at, there's no room for error of a crop problem. You've got the USDA plugging in a 52 bushel yield and our carryout slightly under 300 to start the growing season. So any concern, and you're taking that bean carryout, you could take it down to pipeline supplies in a hurry if we start having some weather issues.
And Heather, let's throw it to you. What are your thoughts on weather and how that might be moving things?
Yeah, I actually enjoy doing a little nerdy weather research, and I go down rabbit holes here. And one of the most interesting things about the last couple of weeks is if anyone is looking out at those drought monitor maps that the University of Nebraska produces, actually, I think they're good, like bench line, just trying to figure out what the trend has been, right? And we've seen a lot of moisture in the last couple of weeks, but we actually have not seen a lot of overall longer-term drought improvement in this western part of the Midwest and the plains. And then there has been some expansion in drought into central and northern Illinois and a pocket of northwest Indiana, which we all know that those are pretty important areas of our corn and soybean production. And so to see that and actually realize they are starting to lag behind on their precipitation for this spring has been kind of an eye-opener. That's not gotten a lot of attention. It's the areas that are too wet to the south of them that have gotten a lot of attention. There's clearly a huge improvement in large swaths of the growing area, but then there's also some really surprising degradation going on. So I do think it's extremely important to keep getting routine rains. Right now, the market is really loving having both the GFS and the EU runs line up and match. So if we see a 2-week forecast where the GFS and the EU is saying the same number of storm systems coming through, they are trading that like it is gold, and it has already happened. That's what we're really seeing. Like 2 Fridays ago, we had 4 systems predicted. Both models predicted that, and so we traded it like it happened. Now, shockingly, it did. I will give them that. But that's kind of what's going on, is we're forward trading that weather like it's already a given when those two align. And so that can be a little bit of a slippery slope for a trader, because the minute it doesn't happen, then we reverse that train of thought completely. So there's still a lot of volatility, I think, to come with weather. And, you know, like Ross said, those beans have got to be perfect, and the weather's got to be perfect for that.
Yeah, you are watching the weekly market roundup. No, you're not watching the weekly meteorology roundup. It sounded like that for a minute there as we get deep dive into some of the models. We're coming to the end, though, folks. We need to wrap things up. I want to give each of you a parting thought before we close. Ross, any parting thoughts on the week that was, or moving forward also?
Yeah, the parting thoughts that I would have just for me around the cattle markets is this futures market's really acted tired here lately. I mean, we've thrown the most bullish news possible at this market, and futures are just really hesitant. I mean, cattle are still operating under the major reversal we had back on May 14th, where we made new contract highs, reversed off of it. And while that occurred, we still were setting new record high cash prices. We've done that for really probably the last 6 weeks in a row, been making new all-time highs. And there's no question these feeders are expensive, and I don't see feeder cattle backing off a whole lot in the sale barns until we start to see cash fats back up. So the tricky part is you've got feeder cattle breaking well above where the board is. And so it's hard to manage the risk on this. But my parting thought for producers is, when you see the market, futures market, and the funds be a major long like they are, and you see the futures market not responding like we all think it probably should, there's probably a reason for it. And we need to have some concern here, because there's no question at these record high levels, if something were to reverse course here, turn this market over, it could accelerate in a hurry from these levels. And I just encourage producers, be talking to whoever you work with, be getting a plan in place, and at least having a floor, even if it's some put options that just minimize the loss, because that's what a lot of things are happening right now. I mean, you're just looking at what's the smallest loss I can have on some of these feeders. So just work with whoever you're working with and have a plan in place.
And we're about out of time, but Heather, any final thoughts as we move forward from this Memorial Day weekend?
I would echo the same thing as Ross. And that's, you know, from a commodity row crop standpoint, yeah, talk with whoever you're working with, find your professional, get a plan together, protect. There's a lot of room for error to the bottom end of this thing with big crops. And that's the last thing we want to do, is withstand, you know, bigger movement slower. We've had a little bit of a retracement in May, a little bit of a bump. Just figure out a way to protect yourself and execute a plan. Like, execution is definitely key when you're putting any of these things in place and on paper.
Well, very good. This has been the weekly market roundup brought to you by Nebraska soybean farmers and their checkoff. A big thanks to Heather Ramsey of the ARC Group and Ross Baldwin from eggmarket.net. We'll see you back here again next week and on the next weekly market roundup from Nebraska Rural Radio Network.